It's time for the big three. We've got 3 stocks, 3 charts, 3 trades for you. Rick Ducat will take us through the charts. Here to take us through the trades, Dan Deming, the managing partner at KKM Financial. Dan, great to see you this morning. Would love your thoughts on the market action that we're seeing in the wake of Alphabet's report and Qualcomm's report and the data we got this morning. Just a sea of red as I look over everything down more than 1% right now.
Yeah, for the major averages, certainly a sea of red. Yeah, this is what we used to call on the floor a tummy tester type of scenario, as far as certainly feeling a little bit roller coaster-esque right now in the market, as we're seeing some highs and lows across various asset classes. Now, one thing I do want to point out, though, Marley, is that if you look at consumer staples, are actually higher on the day, and utilities continue to hold in there. So you're seeing a big rotation continue to unfold. We're seeing the significant volatility that really started in the metals a couple of weeks ago, now spilling over into the other parts of the market as we see some resetting of expectations and just some general volatility that the market's trying to contend with. So yeah, this is going to be an interesting time period here as we roll into February, as it does appear that this rotation is getting more pronounced. And we're seeing some real stress tests in some of the areas in the market that I think is also creating the volatility that we're going to probably continue to see here for the next couple of weeks.
All right, a tummy tester of a day. We've got a stress test coming for the next couple weeks. Let's talk about your first pick and if it plays into any of that setup. We're talking about Johnson & Johnson here, performing pretty well year to date. I think they're up about 15% here. Walk us through this pick.
Yeah, again, I mean, this is kind of not necessarily a consumer staple, but what you would consider probably a defensive type of holding. And I think the real focus here on these names today is certainly Exxon Mobil, more in the energy space, but more defensive in nature as far as the trade examples today. So Johnson & Johnson maintaining this upward price action, even in the wake of the selling pressure we're seeing in other parts of the market. And I do think that longer term, this is going to continue to maintain this upward momentum. So again, looking to capture further upside.
All right, so as we look to capture further upside, Rick, and we take a look, you can clearly see the momentum that Dan was just mentioning. Take us through the technical setup.
Yeah, I mean, this one has been enjoying a nice push to the upside here. Definitely one we don't need the Tums for today, I guess, here. But making new highs, 239.58 is where we topped out so far today. Upward channel, very narrow, very steep between our two white lines. You can also see that earlier you could have drawn a different channel between our two blue lines, a much more modestly sloping, but still consistently trending upward trajectory here, from which we had a bit of a breakout to the upside. That then became a breakout point as well near 215 or so. Some other horizontal price levels to be on the lookout for. 220 was some old highs, 225 some recent lows, and as I said before, 239 or so 58 being our highs of the day. So when we do look at our moving averages as well, 5-day EMA lines up pretty closely with our trend line. That comes in near about 233.50. Meanwhile, our 21 EMA, our monthly EMA in teal there, is at 223, and that lines up with our old channel. So that could be a boundary that gets retested if we do see some kind of pullback in the coming weeks. RSI still quite high, 85.8. RSI only goes up to 100, 0 to 100. So 85, 86 is a very high reading here. We continue to make new relative highs as well. When we do finally also look at our volume profile study, we have not seen any really super clear nodes except for here and here in the recent term. So around 220 and 225 or so would be some areas to watch out for.
All right, so 220, 225. Right now we're at 238.50. Dan, as you look to try to capture some upside here, how would you structure a trade?
Yeah, the trade example today, Marley, is basically buying the stock, having the opportunity to hold that stock, and then selling an April 250 call above that for about $4.50 when it was at 237.5. Gives you about 8% upside capture. It gives you an exit point if the market continues to maintain this upward momentum and get above 250 at April expiration. There's the opportunity to take the position off if that is the decision that's made. But nonetheless, collect some premium and capture the upside momentum if we continue to see this maintain this price action, and which appears, certainly from a technical standpoint, it looks like it's still got some further upside to go.
All right, let's take a look at this next chart, too. We're talking about Exxon Mobil. You already mentioned we're moving into energy here. They have also been making a pretty significant move to the upside, had their earnings recently. Are you bullish or bearish here?
Still bullish on this one as well. Again, just I think some of the momentum that we're seeing in this rotation that's unfolding, and also when you look at energy as a whole, we're seeing some life coming back into particularly WTI, and I think that could be a theme that maybe the market's not anticipating this year, that we could see some further high upside price action for crude as we move through the year. So I think that overall, Exxon doesn't necessarily rely on that, but it certainly benefits from that as far as sentiment. And I think that you're going to continue to see this market move higher. So again, looking to capture further upside in Exxon, maintaining this upward momentum.
All right, Rick, so let's take a look at the upward momentum. It's pretty sharp in this chart. Take us through the technicals.
Yes, a similar theme among our three charts today would be these very sharp, very narrow channels to the upside here, showing strong momentum. And we mentioned before the segment, we've been talking about Exxon a lot lately because we had this very notable breakout. If you were to look back here, you can see we had some highs as well as a low point before our gap down. That area comes in between about 117 to 120 or so. That was a bit of a halting point here for a while, but then we had this very energetic breakout. Now we are on pace for a Harami type candle today, which is after yesterday's large green candle. We now have a smaller red candle in which the real body, the distance between the open to the close, is completely enclosed by the previous day's candle. So the opposite of an engulfing candle usually suggests indecision or a stall in momentum here. But for now, 5-day EMA in blue, 143 is our weekly EMA, could be a short-term boundary. Teal EMA here, our 21-day monthly at 135. RSI showing a little bit of bearish divergence here. Price making new highs, RSI trending downward. Keep in mind, though, we are still above that overbought level of 71 here. And divergence is not necessarily the crystal ball that tells you when a decline is coming. It's just kind of saying the pace of the gains is starting to slow down while we're at these high points here. Heavy volume here around the area between 139 to 141 is the closest notable point. Not really a lot of very good nodes during this very rapid ascent. We simply haven't had too much time to develop a strong trading activity at any particular price level yet.
All right, and Dan, I'm really looking forward to hearing your trade on this one because we had Don Kaufman on earlier this week. He had a bearish trade, a bearish put spread that he was buying out through the March 20 expiration. So I'm really looking forward to hear how you structured the trade here.
Well, again, I think there is a chance for maybe a little hesitation as far as because of the fact that it has had such a rapid incline over the last couple of weeks. And so today's trade example is a risk reversal to create a zone if there is some weakness and get put in the stock around that 135 level. But if we maintain the upside momentum, then the opportunity to capture further upside. So it's a 135, 155 risk reversal, selling the 135 put, buying the 155 call. You can do that for about 25 cents. So slight debit, but again, creates a capture zone to the upside, but also gives a cushion if there is some weakness over the next month to get put in the stock at a little bit better levels than where it's currently trading.
All right, and right now trading at 144.54 today, down 2%, more broadly down with the market on the whole. But let's take a look at your last pick here. It's Coca-Cola. They've been making some changes to their product lineup to try to align with what's selling and what consumers want right now. Walk us through this one as your third pick in the big three.
Again, this is consumer staple. You can look at Pepsi as well in this area. Certainly, they seem to be benefiting from some of the trends. Hershey's is another one to take a look at as far as just the dynamic of the rotation that's taking place under this market. And I do think that, as we continue to see this rotation, some of the air coming out of some of these high flyers, that consumer staples are probably going to benefit from that moving forward. And so this is one name that comes to mind right away. And I think that there's going to continue to be upside capture here for Coke if we continue to see this rotation unfold. So again, looking for this to maintain its upward momentum.
And another steady march in another narrow channel here. Rick, you said they have similar charts. I mean, I checked to make sure the chart was changed because it looks so similar to the upward channel that we saw on Exxon Mobil. But how is this setup different than what we saw there?
Well, I don't blame you for checking because we also had a very prolonged sideways area before the push to the upside. So again, very, very strong resemblances between our charts here. That's one of the interesting things about technical analysis is the fractal nature of the patterns means that these types of situations play out over and over again, regardless of time frame or really even of the product here. So we had, in this case, an area of resistance, our old green line near 73. We had our breakout point. Again, not really having a lot of time to develop any notable low points here during our climb. I kind of just tried to mark off the even numbers where we kind of paused or hit a high for the day, 75, 77, then our highs here, 78, 79. If we were to consider our moving averages, 5-day EMA, again, all these ones are moving very quickly. We don't have a ton of time yet for the EMAs to catch up here. So this one is our fastest one. It comes in near 76.61. Notice how far away our monthly 21 EMA in teal is, near 73.50 or so, kind of speaking to how quickly the price has climbed. Again, a very high RSI, 79.90, just shy of coming in near that 80 level here. So look for RSI to start to wane and for the crossover back out of that overbought area. Finally, we can see that here our volume profile shows very obviously that all the heavy trading activity is down here between 69 to 72 or so. But we do have another smaller pocket here between about 77 to 78. So this could be a potential foothold starting to develop.
And that's right about where we are right now. We're at 78.13 right now, up 1% on the day. Dan, and as you try to take a look at this one, and as Rick always likes to say, we can always go higher. Are we trying to capture upside with this trade?
Yes, but also define risk. Again, I think the one thing about these last two charts, as you pointed out, they are very similar, very explosive. That's why I think that looking for a buffer zone, or in this case, defining risk, is thought process and the trade example today. So in today's trade example, this is a call spread buy in April. It gives you a couple months, and it's buying an in-the-money call, the 77.5 call, and selling the 85 call in April. You can do that for about $2.65 here. Again, a 2-to-1 risk-reward type of scenario on this trade example, but it has the opportunity to capture further upside if we see the momentum maintained. But also, in this case, if there is a reversal or some hesitation or a change in the sentiment in the market, defines the risk to the downside. So I think that was part of the thought process in today's trade example, was defining risk, but still having the opportunity to capture further upside if this momentum persists.
And Coca-Cola does have an earnings event in that window, too. They'll report their earnings
Correct.
on February 10th. Dan, I want to thank you for being with us for Big Three today and bringing those picks to us. Dan Deming, the managing partner at KKM Financial, and, of course, Rick Ducat for always breaking down the technicals for us in the Big Three.